Hi, everyone. Thank you so much for joining us today on Not Just Another Market Minute. I'm Kseniya Pichardo Martinez with Keller Williams Golden Triangle Realty. And this is the incredible entrepreneur, Jesika Lennox with Mortgage InGenuity. Jessica is one of my most trusted and highly recommended mortgage brokers. Now, we're here today to discuss the stresses of today's economy and how lenders are here to help you. Then we'll be moving into how to best prepare your mortgage approval and the next steps that you need to be doing today while purchasing in this market. Jessica, hi. Tell us a little about yourself and your journey. How did you get into the mortgage world?
Thanks for having me. Yeah, that was a nice warm welcome. And I'm with one of the top agents in KW, so always a pleasure to speak with you, Kseniya. So just how did I get into financing? So I was back learning about investing and where to put my money, and I decided that real estate was the place to do it. So I started looking into that. We purchased a few homes and ended up kind of coming to a bit of a standstill. Policy changes in 2015, 2016. So then I decided it was a great time for me to extend my learning and start seeing how the lenders were looking at portfolios, what was the best way to move forward. And it looks like it was into corporations we went, so that way our portfolio can keep growing. And as I was going through all of this, it was one of those things that obviously you talk to friends and family about what's going on in your life, and a lot of people had questions about the financing credit and how the whole thing kind of unfolded. And I realized I really enjoyed teaching people about this process and helping them build their business as well.
That's amazing. I love your story, and I'd love to talk more about it on obviously another call, though. So for those of you who are watching, please make sure to subscribe to that as well, as invitations will be sent out on another date. Now, keep your eye out on that, and please share with anyone who may be interested. Now, okay, what I would love to talk about first, Jessica, is something that is currently happening in today's world, which is payment deferrals. Could we dive a little bit into that for a moment?
Yeah, definitely. Obviously, with COVID-19, the economy's definitely hit with insurance or employment insurance going through the roof. So what the lenders have decided to do is they've given a little bit of a relief support. And so this can be deferred payments up to 6 months. I'm sure a lot of people have already heard this. Now, each lender is offering a different way of communication as the phones have just been bombarded. So please reach out to me. I'm sure you'll have my information above, below, wherever you'll end up finding it. And I can give you your specific financial institute, so that way you can reach out to them and know if that's something that is going to be beneficial for you. Now, with saying that, a lot of people are kind of back and forth on the fence of whether or not they should be applying for this deferred mortgage just in case. That's not what it's there for. This isn't a free pass for 6 months so that you can free up some financing or anything like that. This really is for those dire cases. A lot of people have had to go on the back burner with their employment and wait this out as to keep everybody safe, right? So really only case by case, the lenders are approving these. And really it's if financial stress is really high, if you have not been able to return to work because of this. And what they're actually doing is putting the payments on top of your amortization, and you are still getting paid charged interest, So you really want to keep that in mind when you're applying for this, that it's going to end up costing you in the long run. However, if it is more beneficial for you to save right now, so that way it takes a little financial burden away, then it is the time to apply.
Okay, that's terrific. That's a lot of really great information. And please reach out to Jessica if you have any more questions about it. I think it is very important for everybody to have a good grasp of everything that's going on and how you're able to help. I have a question for you about that, Jess. How is it impacting the credit scores?
So what banks have now implemented is that it's not going to go through as a missed payment. Originally, that was a fear that your credit score would go down, but they've implemented their system so that way it doesn't go through as a missed payment. It really is just the interest that's going to be put on, and then your amortization is going to have added added years put onto that as well.
Okay, sounds good. Now, with interest being quite low and the buyer still needing to buy, let's talk a little bit about what a buyer can do to prepare for a mortgage approval. Jess, what are some of the not so obvious steps that a buyer should be taking or thinking about taking before purchasing a home? I think I lost Jess here for a moment. Let's see what's happening. Hi. I'm not sure what happened there. I'm glad you're back. What was the last thing that you heard?
Just about preparing for application at this time.
Right, exactly. So what are some of the steps that buyers should be thinking about at this current time?
Yeah, for sure. So, especially at this time, just because interest rates were changing so quickly there, and if that is something that you're moving forward and you really are motivated to purchase a home, and that's something that you're going through, is first and foremost is your pre-approval. So pre-approvals, that way the lender has all of your information when you need to get going. It just allows the process to go so much more smoothly and faster as you're already as on the top of the pile, so to speak, right? So that way you're not going to be having a bunch, like when I do my pre-approvals, I've had people tell me countless times that I ask for a lot of documents, and my response has now become thank you, because I am looking at your entire application, how the bank is going to be looking at it. And I want to have steps A, B, C ready, because I don't want to be hustling after the fact when you already have a conditional offer in place, as I always do recommend having a conditional offer on financing, because the lender has their process of going through everything as well. But yeah, I like to make sure that I set you up properly and that there's multiple ways of moving forward throughout the process. And going quickly. Obviously, time is of the essence, especially in these markets the past couple of years.
Right, absolutely. So what are some of the things that a buyer should be getting ready when having that first conversation with you?
Yeah, so other than the documents, like I said, is that something that I do have a software program that's super user friendly. Anybody that's used it absolutely loves it. Thankfully, Mortgage InGenuity is very innovative when it comes to the software, and especially in today's age when we're doing Zoom meetings and not meeting to get those documents. Is we're going to be having a sit down, and here I'm going to actually share my screen so people can see.
Perfect.
Is what we discuss is I have this phantom application going here. So just if we had personal loans and credit cards, so to speak, I end up having to take the 3% or whatever the payment would be with that loan, and then 3% of credit cards and lines of credit. You can end up, some lenders use 3% of the limit and others do 3% of the balance. But regardless, what a lot of people don't realize is the GDS and the TDS is the biggest aspects that the lenders are looking at, as well as your credit score. So obviously this isn't a real person. I don't have my credit score here to show you, but what I want to let people know is when they're looking at their debts and their income and they think, oh, I can afford this amount of payment, or that's what I'm comfortable with. That might be fine when you're looking at a rental, but when you're looking into purchasing a home, what they want these numbers to be around to make sure that you aren't over leveraged or it's going to be too tight on your income is we want these numbers to be under 39 and 44. So keeping your payments lower will affect your total debt service, and then keeping your debts low altogether will impact your gross debt service. So I always find that that's one of the biggest takeaways with my borrowers, is that they don't realize how much these impact their scores. Now, obviously, credit scores is going to be something that we look at as well. And that's going to be where you want to keep your income, or sorry, your balance on your credit card and your line of credit's less than 50%, as then the lenders are going to be making sure that you're not over leveraged, and then obviously like making your payments on time. So those are all things that we're going to be looking at.
Now, is there such a, sorry to
Nope.
interrupt. I had a thought.
Yeah.
So is there such a thing as too much credit, too many credit cards open? Should we start closing some of them off because we have ones that we haven't used in years?
So very good question. And I actually am glad you brought that up, as the only way that there's too many credit cards is if you're using all of them to their max. So as I said, is we want to stay less than that 50%, and your score will just skyrocket once you start doing this as well. I've had clients that I've coached through their credit and payments, and they've gone up like 150 points within 2 months.
Wow.
But with that comment that you made about closing off old credit cards, I highly recommend to always hold on to them, as one of your credit scores percentages come from the amount of time you've had your credit established. So let's say you have a credit card that you've had for 10 years and you don't use it anymore because you wanted to get points at Shoppers instead of Canadian Tire.
Yeah.
I always drop off of my points. So
yeah, love my points too.
love
And
my
look,
points.
I could finally have my printer that started working, so this is exciting news.
But
Yeah.
yes, with the credit card, is if you close that one that you've had for 10 years because you just got a new one that you're going to start using more regularly, now it's as if your credit has just been established since that's been in place, and your 10-year history is now erased. So what I always recommend is just cut up your card, don't use it. You'll get a letter saying, hey, you haven't used your card in 2-3 years. We're going to cancel it if you don't use it in this amount of time. Spend $5, $20, whatever, pay it off and let it sit again. And your score will go nice and high from that point.
Fantastic. I'm keeping all of mine then. That's awesome. I had another question. Now it's kind of left me. It was on the same subject. Let's say somebody doesn't have any credit cards. What is your recommendation for that? How do we build up that credit?
Yeah, to establish credit. So what we want to do is you want to have at least 2 lines through the big banks, right? So through whether it's TD, a credit card, or a personal loan, car loans. Like I've had people ask too, like, hey, my husband wants to get a car loan and we have enough cash to pay it off. Like, what's the big deal? But it's those regular payments that you're making consistently, and to adding to your history. So that's where you want to have 2 lines open. If you're not getting approved for the credit cards or a personal loan, then sign up for one of those credit cards that you prepay. So then after a few years or a year, and you've proven that that's something that you're going to maintain and that you always have the funds, then you reapply and you'll be able to move forward that way.
That's fantastic. So does it take very long for your credit score to build up? Let's say, you had your credit cards maxed out, you've paid them down 50 or more percent. How long will that take for it to reflect in your credit report, more or less?
So even for your credit score, let's say it goes up after 4 months of you paying everything off, if you've missed payments or anything like that, your score will start to climb. However, the lenders do want to see a clean bill of health for like 2 years.
Okay.
Unless there's an actual explanation of whether there was a sick parent or you ended up losing your job and then that's why it got paid off all at one time when you got another one, or this COVID ended up happening and we had to put things on pause. So if there's an explanation, then they can be a little bit more lenient. But again, that's going to be case to case.
Right. So if our viewers right now are a little bit confused and still have questions, could they reach out to you? Will you be able to go through this with them based on their individual scenario?
Oh, for sure. Yeah,
And
I enjoy talking to people about this stuff. So
that's amazing. That's awesome. So we'll give you some more information on how you can contact Jesika at the end of this, and also we'll have all of the contact information in the feed. So please look out for that. Jess, is there anything else that you think is very important and valuable to know right now in our economy, and for people who are thinking of buying a home?
I think that it's just take the precautions. Make sure you get your mortgage agent or broker their documents immediately. This is going to make your process a lot smoother. And then, yeah, it's still go out and buy, still sell if you're looking to sell. We do have things in place to make sure that people are staying safe and that you can get approved. So let's just make sure we all do our due diligence, and then we can go out and shop for houses. Yay.
That's awesome. And then, what are some of the next steps? So once you've gotten your pre-approval, you're already past that. I know one of them is don't go out and buy a car or a boat. Anything else you can add to that?
Yeah, we've had some people that, especially furniture, I find that's a biggie. Is people start putting furniture on those credit cards that you don't need to pay for 2 years, or projects, whatever it is with your home, is just wait until you're in the house, as lenders will end up doing a new credit pull, and that could end up making your ratios go out, and whether we get co-signing. And that's the other thing too, is if you don't have something in place, or you don't think that you can get approved, or you don't have a down payment, or whatever it is, come and talk to me. Let's get a plan in place. We'll make sure that whatever your goal is, we know exactly what your target is. It's a lot easier to hit a target that you know where it's situated, instead of just throwing your arrow up in the air, so to speak. But that's going to be the biggest, is come and talk to me, get yourself educated on where you want to go, what you're currently at, and then we'll make an action plan and get there.
That's fantastic. So with all of that, the viewers are wondering, how do they contact you? Tell me, what is the best number to reach you, Jesika?
So my phone number is 519-500-3608, and you can text or call, whatever's going to be easiest. And then my email as well, which it's some funky spelling, so we'll put that in the feed.
Awesome. Hey, there's nothing worse than mine.
Yeah.
Well, great. Thank you so much for taking your time, Jesika, to speak with us today. And thank you all for tuning in. Please like and share this video for anyone who you think might find this useful. And remember, keep your eye peeled on the next invitation to our next discussion. This is Kseniya with Not Just Another Real Estate Market Minute, keeping you up to date with what you need to know. Reach out to me to see how we can get you where you want to be, or Jesika. Thank you so much once again, and thanks, Jess. We'll talk again soon.
Thanks for having me. Yeah, of course.
Bye.
Bye.